How to arbitrage trade, crypto, and maximize profits. Ever wondered how you can profit from crypto during market fluctuations? Crypto arbitrage is an innovative strategy. Buy low on one exchange, sell high on another. It's a clever way to capitalize on price differences. Let's dive into the world of arbitrage and unlock its amazing potential. Crypto markets are decentralized, meaning prices vary across platforms. These discrepancies create golden opportunities for arbitrage traders to profit. Whether you're a beginner or an experienced trader, mastering this strategy can diversify your portfolio and boost returns. Exchange arbitrage involves trading the price gap for a particular cryptocurrency between two or more exchanges. For example, buy Bitcoin lower on exchange A and sell it higher on exchange B within minutes to lock in profits. Here, you leverage price differences between three cryptocurrency pairs on a single exchange. Convert your base currency into two intermediaries and back again, earning profits as prices shift among trading pairs. Location is key here. This approach exploits price differentials caused by geographical market factors. Traders might buy cheaper in countries with high liquidity and sell in low liquidity markets where prices are higher. Understand the ever-changing nature of cryptocurrency prices. Study trends and analyze market conditions. Equip yourself with reliable tools to monitor price differences and chart volatility levels. Look for exchanges with significant trading volume and lower fees. Create accounts on multiple platforms and complete KYC processes swiftly to begin trading without delays. Hidden costs like withdrawal fees or deposit charges can dilute profits. Choose wisely. Always calculate net profitability before executing an arbitrage opportunity. Timing is everything. Use automated bots or cryptocurrency tools to monitor prices in real time. Execute trades quickly to ensure you capture the arbitrage opportunity before prices shift. Crypto remains prone to security risks. Use strong passwords, two-factor authentication, and hardware wallets to protect your earnings and ensure smooth, safe transfers. Crypto markets move fast. Price changes during trades can dampen profits or even cause losses. A firm grasp of quick trading is crucial to stay ahead. Blockchains can experience lags due to congestion, delaying transactions. Always account for potential delays when planning arbitrage trades. Look out for hidden fees and regional trading regulations that might impact your ability to execute arbitrage effectively. These unnecessary drains on profitability can make or break your strategy. Use multiple reliable exchanges to widen arbitrage opportunities. Automate your strategy with trusted trading tools or bots. Start small to limit risks and increase your experience. Stay informed about crypto market trends to spot potential opportunities. Imagine Bitcoin on exchange A costs $30,000, but exchange B lists it for $30,700. By transferring $30,000 worth of Bitcoin to exchange B and selling it within minutes, you can net a profit before fees. This straightforward example highlights why arbitrage is a go-to strategy for traders. Crypto arbitrage trading is an exciting, dynamic way to explore the crypto market while securing steady profits. Start your journey today. Analyze opportunities, execute strategies, and watch your portfolio grow. Be sure to check the description of this video below for tools, strategies, and expert resources to elevate your trading game. Take action now.